Good day, folks, and welcome to Best Trade Setup. And in this video, I'm just going to go over yesterday's trade setups and a little bit of today's earlier setups. So this one here is yesterday's setups where we have a fake out, and with every fake out is a W pattern. And this is also a 3 candle pattern in the form of 4 candles, but it's never more than 4 candles. The reason why I say it's valid is because when you open the candle here and it closes here, it forms a pin hammer. So this is also known as a morning star pattern. If it's inverse, an evening star pattern. So now we have this in the 5 minute order block area. So now that's 4 confirmations. I need 6 confirmations to show that price is indeed going to go up, and my entry signal is a touch on the 20 EMA, a close below it, and then a close above it. So here we have a break and retest, and this break and retest is in the form of a triple bottom because price goes up, down, up, down, up, down, up again. You can see clearly on the line chart. So now we have 6 price action confirmations for buys. We just need an entry signal off of the 20 EMA, and then we have it right here. So when this happens, your stop loss is below this whole pattern right here, and aiming for at least a 1-to-1 risk to reward, of which price did eventually reach that and a bit more. From this point on, we have buys confirmed. So to re-enter buys again, we just need a retest of either a 3 candle pattern or a W pattern at a significant level. And indeed, we have it right here. So we have price closing above this 5 minute significant level, this resistance level right here, comes back down, closes above it. Now this isn't a valid 3 candle pattern because if you open up the candle here and close it here, you find that the wick of it is less in length than the body and the small upper wick. So we need the wick to be more in length compared to the body and the upper wick. So we don't have that, but we do have price closing above and then closing rather below and then above, comes back down with this small red candle, closes below and then back up again. So this is a break and retest in the form of a W pattern. So it's valid enough for us to enter buys, stop loss below here, aiming for a 1-to-1, and as you can see, price did actually go all the way up here and beyond. This right here on the 15-minute time frame is at least 4 inside candles within the range of this 15-minute candle. So when that happens, I consider it a consolidation, and when price goes above either boundaries, it's a break of structure, therefore forming a 15-minute order block or a 5-minute order block like this one here, which is going to be a point of interest moving forward. As you can see, price actually did dip into the 5-minute order block before it shot up. So around this area, buys were confirmed. I will show you this later in the slides that are to follow. Here's a closer look at the break and retest in the form of a W pattern that I mentioned earlier on. You can see how if you start the candle here and close it here, the body and the upper wick is going to be more in length than the lower wick. Here we have price closing below the 20 EMA and then closing back above it for entries right here. Here's the buy I was telling you about earlier on. So what we have here is a fake out at this level, this 5-minute level. It's significant because price has been breaking structure, moving up. So every time it does that, it leaves an order block. So it leaves an order block and also a significant level. So when I have a level above, such as this one here, above a 5-minute order block, I only need 5 confirmations to enter a trade as compared to 6 confirmations in any other situation. So we do have a fake out, and with every fake out is a W pattern, also known as a double bottom. 3 candle pattern right here in the form of 4 candles, an engulfment, tap into the 5-minute order block, and then a close above the 20 EMA. This is where we enter our buys with the stop loss below this 5-minute order block area to be on the safe side. But as you can see, right before the high impact news came out, price actually would have taken out our stop loss and then shot up. Usually my stop loss would be somewhere between this level here and this one here. So I would have gotten out, well, price would have taken me out here and then went up, which is so unfortunate. But if your stop loss was a little bit more, then you would have been in on this trade and then gotten your either, this looks roughly more than a 5 hour type of trade. But it does happen. The trade is valid, and whether we get knocked out is still fine as long as we focus on the process of our trading and following our plan. And here we have a wider picture. Price actually went up about 100 pips, actually 120 pips. Would have been nice to have caught this one, but hey, we live to trade another day. Now, this is this morning's price action around the Asian area. We have sales confirmed thus far. This is where price is. I'm just waiting to see if we're going to get an entry signal to the downside. If not, we just wait. So the way that I trade, I just go about picking up all these signs showing me where price is going to go next. And what we have here is a sweep at the previous day's high. With every sweep is an M pattern, also known as double top, because we see this right here, first leg, second leg. And then we have a close below the 5 minute order block, which shows a potential for price to go down. But it's not enough for me to enter because there's only 3 confirmations so far and I need 6. This is our third one. We have price again closing below this 5 minute order block, created when price broke out of this consolidation to the upside. Remember, a minimum of 4 inside candles on the 15-minute time frame. When price breaks beyond either boundary, it does form a 5 minute order block or a 15-minute order block. So we have price going and closing below this 5 minute order block right here. So we have 1, 2, 3, 4. I need 2 more confirmations for sells. And we have it here in the form of a break and retest and a 3 candle pattern in the form of 4 candles. Remember, open the candle here, close it here. The length of the upper wick is more than the body and the lower wick. So price is rejecting this area. So price action gives us 6 confirmations. So I need the perfect entry, which is right here, where price goes back up above the 20 EMA and closes below it. When it does this, the stop loss would be above this area, aiming for a 1-to-1 risk reward. But as you can see, price gave us a little bit more than that. So this is where price is currently. Let's go take a look at the trading view charts and see where price is.